The Money Matters Radio Network. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled 9 Tips to Spring Clean Your Finances. Mike, when we look at getting things squared away to start a year, one really important place is just making sure that your accounts have the right beneficiaries on them to begin with.
Yeah, I've seen this ignored. It's rare that it comes into play, but certainly if you pass away or if your spouse passes away, it's going to make life a lot easier if you've thought about where the accounts go after the fact. I cannot tell you how many times I have seen people leave an ex-spouse, for instance, on as a beneficiary without really thinking about it, or the number of times where people have made changes to their estate plan but not change their beneficiaries.
And a piece that goes along with that you mentioned there is making sure that your estate plan is also updated as well for life events or changes in your family situation that may have occurred.
Absolutely. I mean, not everything is going to have a beneficiary on it, but there's additional confusion there too, right? I change my will or I change my trust, and I don't tell the investment company that manages my 401k or my investment account. Those two things do not talk to each other, and in many cases, the beneficiary will supersede the will, the trust, these things that you think you've taken care of by visiting the attorney and checking all the boxes, but not necessarily depending on how you do it.
Our guide is titled 9 Tips to Spring Clean Your Finances, and there are 2 ways to request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can request the guide at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Friday here on the Financial Exchange is Chuck, Mike, and Tucker with you, and some more economic data today. Whole bunch, actually, that we continue to get, and we'll start there. 8:30 this morning, two key pieces of data. First, we get the Producer Price Index out, so let's talk about that. Producer Price Index is exactly what it sounds like. It is the producer version of the Consumer Price Index. So, whereas the Consumer Price Index says, hey, here's a basket of goods that individuals typically purchase as part of their monthly budget, the Producer Price Index says, hey, here's a basket of stuff that producers are buying as their input costs.
Got it.
And what we saw, PPI comes in at 0.3% for the month, hotter than last month, which was down 0.1%, and hotter than the consensus 0.1% estimate. Core PPI.
There we go.
Thank you, Tucker. Core PPI, which is not, first of all, it's not analogous to core CPI because the best way to put this, a producer does not require shelter.
True.
There's no home for a producer. Yes, they have a facility, but that's different. It's calculated elsewhere. So there's not a one-to-one pass-through. But core PPI came in at 0.5% for the month, also hotter than the previous down 0.1% and the 0.1% expectation. So, Mike, this week, two inflation reports, two bad inflation reports, something that really requires monitoring over the next couple months because, I'll come out and say it, the February and March CPI and PPI data will be the most important data sets in this series in probably about a year and a half.
Yeah.
Probably. You got to go back to like October of 22 to find the last time that there was this much importance placed on these numbers.
Yeah, and we can all see paths where this starts to come down. We've talked about on CPI how shelter continues to drive up so much of this. But the concern at this point, I think, for the Fed and for me and anybody that cares about this stuff is not so much that we're going to see – I don't think we're going to see goods inflation again. I'm not terribly concerned about egg prices spiking back up to $6 a dozen, although that would be concerning to me. I just don't think it's likely. If services inflation –
Depends on the chickens, man. It depends on the chickens.
If services inflation kind of continues in this direction, right, and we talk about shelter as the big one, but there's all sorts of stuff, right? If dining out because wages are up. If pet care
car
services,
insurance costs keep going
insurance,
up 20% a year.
Like these are the pieces that are not supply chain related. Those problems are fixed, but we've worked through those inventories. And if these things start pushing prices higher, then I agree with you. There's not much that's more important than that. What's interesting at the same time, however, are the other data points that we got this week, not about inflation. I don't want to just completely shy away from finishing this conversation about inflation, but we also got a few that showed, hey, the economy is slowing down a bit. Retail sales, I know you guys covered yesterday. There was industrial production, again, missing estimates to the upside there, which, again, all these data points I think this week were surprising and not catastrophic.
And nothing's pointing conclusively in any direction.
Right.
Is what I will say. There's no coherent message that you can take from this. It's just hey, it's muddy, and muddy data is what happens at inflection points. But the question is, which way does this inflect? Does it, do we see, a continued acceleration in the economy and a rebound in inflation becomes problematic? Maybe that's possible. Do we see things, like some of the slowing retail sales and some of the slowing the housing construction numbers you kind of write off because of the giant storms we had in January?
Sure.
We got 2 feet of snow in the Northeast, and so that kind of slowed things for about a week. So I don't take a ton from the fact that starts were slow because permits were still fine. And you've got a few things here where you say, there's some signs that you may have some slowing happening, which in theory should put the brakes on inflation,
right.
But does it cause economic issues down the road? So it's messy, but this is also why I said, look, in the fall, in late fall, November, December, when things looked really good in the economy, that's why I say, look, when things actually look really good, it's important to say that they do. Don't just be like, oh, this is horrible. No, it was here. We had a few really good months. There will be other times where the data comes in, like this week, and you're like, ooh, that's not great. That's kind of a pile of hot garbage. We would prefer not to see inflation recelerate back to 5%. That would be rather bad. And so that's what we talk about this week is, the data this week is rather quite bad, is how my 3-year-old would put it.
Bad and confusing, though, because, again, as you alluded to, tough for me to envision both of these trends continuing, right? We got 2 sets of trends from the data this week. One was that prices were heading up. 2 was that economic activity was slowing. Possible to have both of those at the same time, but unlikely.
Yes, there's someone out there that says, oh, that means stagflation. And let me tell you, the first rule of Stagflation Club is you do not talk about Stagflation Club when inflation is under 4 and unemployment is under 4.
Yeah.
That's just not a worthwhile. So much has to go wrong in order to get to a stagflationary period that it's not there. So we can have that conversation if we get there. If you want, my honest assessment, the first part of 2022 was kind of there. You had no economic growth and really high inflation. Then we can talk about Stagflation Club. If you're trying to, say, oh, well, stagflation's let's pump the brakes a little bit and see what happens, because it's not really a common occurrence. It's basically happened the 1970s and one very brief period at the start of 2022, and outside of that, it hasn't really occurred in the U.S. in the last 100 years.
I'm genuinely unsure where this data goes from here. Like you said, it's pretty muddy right now and a little bit confusing as to just the culmination of these different reports. What I will say is that I have a little bit more doubt on the retail sales and industrial production data. You have a few things going on, right? You have seasonal adjustments that occurred in January that are always pretty messy. You did have weather issues in the month of January that you're not likely to see, that I know they try to adjust for but can't always do so perfectly. Whereas I don't think that CPI or PPI was as impacted by those same things. So I guess that's where I land, but I'll tell you, it's a bit of a confusing data series right now.
I am continuing to be on team watch out for an inflationary rebound, but the reason to watch out for it is because there is more economic strength than people think.
Yeah.
And Fed policy is not as restrictive as people think. And if that is the case, if I said this yesterday, if I'm Jay Powell, March rolls around, I say, okay, look, guys, it's March 20th. I'm going to put on the purple tie and tell the people what we're doing. I'm hiking 25 bips. Not because I need to, but because I'm going to send a message. And that message is, yo, inflation, you're not coming back under my watch. And Janet Yellen's going to be upset with me because it means that it's going to be more expensive for her to run the government. Joe Biden's going to be upset with me because it's going to mean that interest rates aren't coming down into the election. But if I'm Jay Powell and I'm looking at, hey, how do I do the job right? I'm hiking 25 bips in March, not because I need to, but because it sends a message that we are truly serious about inflation, and if unemployment's running 3.7%, I'm not dealing with all this hogwash that comes out with, Austin Goolsbee, who's admittedly a very smart person, but earlier this week on the Federal Reserve Open Market Committee says, hey, you know what? We don't want to get caught behind the 8 ball and be in a situation where, we start risking the employment side of our mandate. When unemployment's at 3.7%, you don't talk about risking the employment side of your mandate.
Can I give you my silver lining to all this?
Oh, yeah, you got one?
A month ago, according to CME Group, the expectations by the end of this year was 80% probability that rates would be at 4% or below. Just about, 79.8%. Today, there is a 80% probability that rates are at 4.25% or higher by year end. I know that doesn't sound like a massive swing, but like that's a fairly meaningful swing. And the most likely outcome, again, a month ago was between 3.75% and 4%. Today, most likely outcome is between 4.25% and 5%. Really tied between 4.25% to 4.75%. That's somewhat meaningful, I think, is where I land on that. Perhaps more progress to be done, but that is a pretty meaningful shift in terms of expectations just over a month.
And this is also one important thing to note, Mike. We've seen interest rates, not what the Fed controls, but long-term and short intermediate-term interest rates, they've risen. The U.S. 10-year Treasury at the beginning of this year, you go back to the start, it was sitting at 3.86%. It's at 4.29 right now. So 10-year Treasury has risen 43 basis points in the span of the first 6 weeks of the year. Equities have not fallen apart, and it's not to say that they won't. They may yet. So all you doom and gloomers out there, you may get your wish, which is, I don't know why you would wish for pain, but fine. But the important difference between right now and 2022, rates were going up because inflation was ripping and the economy was slowing. Today, rates are going up because inflation may rebound. It may yet rip. We don't know. But it's going up because the economy's ripping too. And that's the key difference is 2022 was high inflation in a slowing economic environment. 2024 thus far, look, at 6 weeks, we're 11% through the year, so let's not count our chickens. But 2024 thus far is potentially accelerating inflation and rising rates because the economy's too hot. And that's a key difference, and that might be a reason if you're trying to figure out, look, why are equities, why did we hit a new closing all-time high in the S&P 500 yesterday? It's because if the economy's ripping, then ultimately, there's a different view on equities than if the economy's slowing down into an inflationary abyss like 2022. Different setup. Let's take a quick break. When we return, let's see, what do we want to talk about here? Let's talk about a little more about the economy because there's a piece in the Wall Street Journal with a fantastic headline that we'll pick apart to our heart's content, and we'll talk about that when we come back.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Planning for your financial future never stops, and with spring on the way, right now is the perfect time to take stock of your overall strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help. It's called 9 Tips to Spring Clean Your Finances. If you're planning a significant purchase either this year or down the road, we've got important information to share that will help you understand the effect it may have on your finances. You may be retired or getting close to retirement, and if so, this guide is for you. Take the necessary time now to review your financial strategy and learn about what adjustments you can make that might benefit your planning. The guide is free, and it's yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate and asset protection are the keys to a successful retirement. Cushing & Dolan are experts in elder law, and if you're ready to start your planning or need a refresher done on your existing plan, you need to get their new guide called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn strategies to help you protect your assets from probate, as well as the nursing home. We'll also show you how to properly create your will and set up your beneficiaries in a way that will ensure your family's security for the long term. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. Proper estate planning is not easy. There are many necessary elements that you'll need to include to give you the peace of mind you want as you prepare for your later years. That number again is 866-848-5699. 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Mike, there is a piece in the Wall Street Journal. It's titled, America's Economy Slowed. This gets at some of the data that we talked about this week. Retail sales, industrial production. It probably won't stumble. That's an awfully bold statement for,
I know.
a piece.
Yeah. You're awfully confident in that.
I'm not.
I know. Aaron is. Aaron back.
It might be. Look, here's the thing. The economic data heading into this month was, as I noted, the technical term, ripping. It was the last 3 months were fantastic after some growth concerns heading into mid-October of last year. And since then, it's just like the data from mid-October through late January was growth up, inflation down.
Yep.
It was great data. The data for the last 2.5 weeks now has been growth down, inflation up. Now, it still doesn't mean that you're heading for imminent recession. The Atlanta Fed, I talk about how they have this modeling program called GDP Now, and it takes all of the relevant economic data that they believe, influences where GDP is going to be, and they feed it into this model and say, what's it look like right now? At the start of February, GDP Now was predicting a 4.2% increase in Q1 GDP. The technical term, once again, ripping. Today, after these 2 weeks of data, the GDP Now model is predicting growth at 2.9%, which is still quite hot.
Great for the United States today.
It's
not
cool.
4.2.
You get a 2 in the first digit of GDP growth in the U.S., and you're like, yeah, we're good. We're fine, because GDP, as we know, is a combination of hours worked and productivity. Hours worked can only increase so fast because human beings only want to work so much, and we aren't having enough children, and immigration levels are rather low, And so overall you end up with U.S. population growing at like 0.75% a year, which is pretty much the aggregate increase in hours. So you get that plus some productivity growth of like 1%. You get around 2% in GDP growth. That's good for the U.S. So 2.9 is, again, it's not to say that we are recessionary, but it's indicative of, hey, if their model has slowed from 4.2 to 2.9, the data that's come in the last couple weeks has been not good. It's been cooler. Does that mean that the U.S. economy won't stumble? I have no idea. If you were talking to people back in September of last year, they were saying, and I was saying this as well, hey, the thing that I'm concerned about is a potential recession, because if this data continues through January, we're probably in recession by the middle of the winter. And I said that the key point to focus on is going to be this next few months of data, and if we bottom out and start to recover, then there's no recession. If we, see these trends continue, then there's a recession coming. And what happened? We bottomed out and growth reaccelerated. So from here to say you probably won't stumble, well, that implies that you know what's going to happen with the data over the next few months.
And nobody does.
No.
I think so. I'll use the evidence that he pointed out just to quote on some of this. Acknowledging that the retail sales data was bad, he quotes that spending on food services and drinking places was up 0.7% from December and 6.3% higher than in January last year. So his argument there is that if American consumers were really worried about the future of the economy, they wouldn't be going out to bars and restaurants. And okay, but again, that's not enough of an evidence point to say, yeah, that means that the economy won't stumble. Like maybe next month they're not going to bars and restaurants as much because some of them lost jobs. I don't think there's any really way to notice that. Fed surveys of manufacturing activity in New York and Philly.
Can we go back to that just for a second?
Yeah.
Just because I want to stress test that for a second. If we go back to 2007 and 2008, just as an example.
Sure.
And say, okay, if we want to look at those years and say, was there any discernible trend there? In 2008, restaurant sales, month over month, food service and drinking places, were up 0.93% in May of 2008. Just before the wheels fell off the economy.
Yeah.
Now, they did go down in, September, October, November. They were declining like 3-4% a month, but that was concurrent with the economy blowing up. So I don't think you can point to this and say, oh, this is a leading indicator that everything's fine, because 4 months before the economy blew up in 2008,
things were
retail,
fine.
It was growing at 1% a month.
Yeah. And that's the trend. That's the difficulty in finding any of these indicators as leading. Most of them are concurrent. People don't stop pulling back on a lot of their spending until they have to, until they don't have that job paying them an income anymore. And so I don't think there's much that I see here that can be defined as some sort of leading barometer about the strength of the economy. Am I impressed by the resilience so far? Absolutely. Do I have any idea what's going to happen over the next 6 months? Not really.
You know what's wild looking at that data set, actually?
Tell me in 5 seconds or less, Chuck.
The month after September 11th, people ate out 7% more than during September. And there was no meaningful decline in September. Let's take a quick break. When we come back, it's Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. services. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, what happens if you don't have a healthcare proxy in place and your spouse needs nursing home care?
So this is a basic document that we don't talk about as much as we should. It allows you to appoint somebody else to make a medical decision for you. And by the way, it's not just one medical decision. It could be any number of things, from prescription drugs to doing a surgery. And yes, the most important one, which is, hey, if all hope is lost, I don't want to, be on a machine. But that's the basics, and you do need it for that. But the bigger point is, if you enter a nursing home and you don't have one of these, you're not going to be able to admit them. You're going to have to go get a guardianship in order to admit them to the nursing home, because they're not going to allow you to do that. So very important that you have one for that. Now, guardianships are time consuming and expensive. You got to hire a lawyer. You got to go through a lot of nonsense, right? If you have this basic document, which you should have for anyway, just for your basic purposes, having it not only for those reasons, but to help you get into a nursing home if you need to, is essential.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request the brand new guide from Cushing & Dolan. It's called Back to the Basics. 866-848-5699, or you can request it from their website, legalexchangeshow.com. Cushing & Dolan have been helping families like yours for more than 30 years. Call 866-848-5699 or request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are negative territory as investors react to the January Producer Price Index released this morning, where wholesale prices climbed 0.3% higher than estimates of a 0.1% increase. Right now, the Dow is down by about 0.25% or 90 points. S&P 500 down over 0.33% or 19 points, and the NASDAQ down by over 0.75% or 123 points. Russell 2000 down by 0.75% as well. 10-year Treasury yield up by 5 basis points, now at 4.29%. and crude oil is mostly flat, edging higher just above $78 a barrel. Shares in Coinbase jumping by 10% after the cryptocurrency platform reported its first profit in 2 years, where its net income totaled $273 million in the fourth quarter, while the company's net revenue of $905 million was up nearly 50% from a year ago. Crypto saw an increased amount of attention from investors in the fourth quarter after the FCC approved the first Bitcoin ETF. Meanwhile, Boston-based sports betting company DraftKings missed earnings and revenue expectations for the fourth quarter. However, the company did see a 44% growth in revenue year over year and also reported a 37% increase in monthly unique players. Separately, the company announced plans to acquire digital lottery app Jackpocket for about $750 million, allowing DraftKings to expand into lottery games. That stock up by about 1/3%. More news out of Boston, where Toast announced it would lay off 550 employees, or about 10% of its workforce. The restaurant management software company also posted fourth quarter earnings that beat expectations. That stock jumping by over 13%. And Roku shares sliding nearly 22% after the streaming services provider provided a profit forecast that came below street forecasts amid a weaker advertising environment. I'm Tucker Silva, Mass Wall Street Watch.
Mike, I want to touch on this piece from the Bloomberg about treasuries, and the headline is Jupiter Fund Boosts Treasury Bets to Record, Sees Hard Landing. And this firmly goes into my category of piece that I don't like for two different reasons. The first is, and I'll quote here, a Jupiter Asset Management Fund has boosted its U.S. Treasury holdings to a record and forecast the world's biggest economy is headed for a hard landing.
Because they told you so.
Now, they don't specify, and this is two different problems wrapped into one article. The first is, okay, how do we know that these guys are right? Actually, there's three problems. The first is, how do we know that they're right? We don't. We don't have any track record on how well they call these things. We don't have any information about whether they're actually good at doing this. The second problem doesn't really talk about the time horizon at which they say this is going to play out. And this is one of the things that I think a lot of investors, I think a lot of disagreements on investing boil down to this, which is, someone says they're bullish, someone says they're bearish, but they might be talking about two completely different time horizons and games that they're playing in a market. One might be talking about, the next week. One might be talking about the next year. And it's not like you come back to them afterwards and say, oh, gee, like, how long did you hold that for? What'd you do? Like, blah, blah, blah. You don't know. The third part that's problematic about this is just the very fact that it was published. And the reason that someone reads this and they say, gee, should I be bearish? Is there a hard landing coming? And this pretends to be research because you're like, oh, like I researched it and these people said that this is coming. Well, no, you read what they wrote. That's not researching it.
And let's be clear, Bloomberg didn't discover that Jupiter loaded up on treasuries because they were reading through some quarterly disclosures and found out about it. They found out that Jupiter is buying treasuries because they think a recession is coming, because they want you to know that they believe this way so that it comes true. Right? Like, they're out there talking their book, people. This is what this is they've loaded up on treasuries, and they want to convince other people out there that they should do the same so that treasuries appreciate because the economy goes through a downturn because Jupiter said so. The stuff that, again, to your point, gets published as research, like, show me a statistical piece on how many different funds out there are increasing their exposure to treasuries and what that means for the net exposure across the entire hedge fund industry. That's research. This is, the CIO or the CEO of one fund going out and talking his book to try and talk his book.
I also just want to read the last paragraph here just because it's kind of a nice little cherry on top. In addition to treasuries, Richards also favors government bonds sold by South Korea and Australia on expectations rate cuts are coming. The fund is avoiding investing in Japanese government debt due to the nation's wide interest rate divergence with its peers, including the U.S. Okay. Does this mean someone reading it? someone's going to read this piece and be like, gee, like, how do I buy South Korean bonds? If you have to ask, you shouldn't be doing it.
Yeah, it's important to recognize that a lot of what you consume in business news of one sort or another are people talking up their own book.
Which is, it's fine, but you just have to know that's what you're reading.
Right. And, 90% of what I see on CNBC or Bloomberg TV, same thing. Just understand that, recognize it. The stuff that made me more furious than ever was when they were talking to all the SPAC kings back in 2021. You have to take a step back and you have to recognize what this is. It's people that have vested interest in SPACs doing well or treasuries doing well or this, that, or the other doing well. And maybe there's a quick disclosure that happens at the end, but it's not in your face and it's presented as research, and it's just not. It's just not.
Mike, one of the consequences of higher interest rates is that in the very near future, probably this year or next year, the U.S. government is going to spend more on an annual basis servicing the outstanding debt than it does on the defense budget. Your thoughts?
It was coming for a while. We knew it was coming. In and of itself, it doesn't mean anything, but if it's not staggering and concerning to you, then it should probably be, right? There's the problem with this continued argument is that there is no threshold, there's no debt to GDP ratio or proven law out there that says once interest payments on the government debt get so high, the economy falls apart and regimes change. Nothing like that exists, and plenty of people that will read this article will point to Japan, whose debt to GDP ratio is far higher than ours. And not that we want to model our economy after Japan's, but they have not failed as a society. So is it troubling? Yes. Is it indicative of, I think, continued future problems with the amount of money our government is spending? Also, yes. Does it mean anything imminent? Not really.
No, and just as a interesting comparison, in 1997, net interest expense was basically equivalent to the defense budget. It was about 6-7% lower, but they got as close as they had ever gotten until the last year. And certainly, look, the 2000s were problematic for a different reason. The whole mortgage crisis and the economic world and almost ending and everything. But the problems that were present in the 2000s were not caused by an excess amount of debt. Well, they were, but not at the government level. And so this is something where when you talk about why it's problematic, it does mean that in terms of the amount of either tax revenue that you bring in, a larger portion has to go there, so it's not going to anything that you're actually providing today. It's going to stuff that you already provided in the past, and you're paying for it. The other piece is, hey, it potentially leads to larger long-term deficits, which potentially make this a spiraling problem over the next 20, 30 years. So,
how willingness are other countries to lend us money, and just general investors across the globe, U.S. and foreign investors, and how willing are our lawmakers to continue to run up the bill? Those are kind of the two things that come to mind for me.
There's a third one that matters on this as well, which is what's the overall path of growth and inflation in the U.S.? If you end up with really strong growth in the U.S., you have the potential to grow yourself out of this because you can grow the economy faster than the deficit grows. And
tax revenues
that's
increase.
Fine.
And yeah.
But the other piece on that is, hey, let's say that the U.S. economy goes in the toilet. The initial thought is, in this matter for 1 year, the initial thought is, okay, gee, it's going to look even worse because the deficit will be larger. The counter to that is that when the U.S. economy goes in the toilet, interest rates come down, and the cost of servicing the debt becomes lower as well because all the old debt that you then roll into, you refinance, you're not paying as much. And this is what we saw, just as an example, in 2021, net interest on U.S. debt was about $350 billion. In the last 2 years, it's gone up to about $870 billion. It's not because the size of the U.S. deficit tripled in the last couple of years. it's because all the old debt, and it doesn't all mature at once, so this is, on a rolling basis. Some of it's short-term, some of it's intermediate, some of it's long-term, but whatever matures, you got to reissue, basically to refinance it at current prevailing rates. Those rates are higher now than they were before. So if the U.S. economy, I'm not saying that this is a good thing, if the U.S. economy goes into a recession and the Fed cuts rates by 300 basis points, let's say that previous article comes true and the Fed cuts by 400 bips. Okay, now you're issuing a bunch of T-bills at 1% instead of 5%. Your 10-year bills, 10-year notes that you're issuing are probably coming out at 2.5 or 3 instead of at 4.5. And so the projections then become better because you're not spending as much on interest. There's a whole lot that plays into this, and that's why these projections, they can be useful in informing a general idea of if the current trend continues. But we don't know.
The current trend almost never continues.
No, not for 10 years at least. The CBO is never right on these 10-year things because they don't know what's going to happen economically over that time span. It's just not what they do. They're not recession forecasters. They take inputs and say, yep, here's what things will look like, all else being equal. Let's take a quick break here. When we come back, we'll talk about 62% of Americans don't have a college degree. And the question that's asked in this piece by the Wall Street Journal is, hey, can they help solve the labor shortage?
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Planning for your financial future never stops, and with spring on the way, right now is the perfect time to take stock of your overall strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help. It's called 9 Tips to Spring Clean Your Finances. If you're planning a significant purchase either this year or down the road, we've got important information to share that will help you understand the effect it may have on your finances. You may be retired or getting close to retirement, and if so, this guide is for you. Take the necessary time now to review your financial strategy and learn about what adjustments you can make that might benefit your planning. The guide is free and it's yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. If you've had a successful career and want to make sure you protect your assets, now's the perfect time to create a plan that will allow you to enjoy your retirement years. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. And in it, you'll get educated on important issues like how to avoid probate, passing your assets along to your family, and potentially eliminating your estate taxes. Don't wait. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for 30 years. Let them help you too. Get their new guide called Back to the Basics today. Call 866-848-5699 or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
62% of Americans lack a college degree. Can they solve the labor shortage is the question posed by the Wall Street Journal. And what's the thesis that they're laying out here, Mike?
Frankly, that while employers have tried to cut down on some of these barriers, they haven't seen a whole lot of success. Now, maybe it hasn't been enough time, but big companies, Medtronic, IBM, Delta, Google, Walmart, and General Motors, just to name a few of them, have eliminated degree requirements from hundreds of their job postings. And focusing more on skill-based hiring instead. And I'm sure they've seen some success there, but by and large, we are still seeing college degrees are a barrier for a lot of companies. And I try and think about why this is, and I think the answer is just that it's tougher to assess somebody's skills than just put a box on an application that somebody can check, right? Like, it's more difficult, for instance, to say, I'm going to assess your writing skills before I hire you than, you went to a pretty prestigious four-year institution, and so I know that your writing skills are going to be up to snuff. But, for example, in our own industry, Chuck, the designation CFP, Certified Financial Planner, you must have a bachelor's degree in order to apply for that designation, which requires its own coursework, its own study, all
which
this
is
stuff.
baloney.
It's garbage. Like, what does somebody with an art history degree, what makes that person a better financial planner than somebody, I don't know,
well, if
an
they're
electrician?
buying rare art, then it could apply.
Right? Like, all of these prerequisites for, especially the professional designations, drive me nuts. Like, if I work for a decade as a financial planner and I don't have a college degree and then I want to go to get my CFP, you're telling me I have to go get a bachelor's degree first? It's, frankly, silliness to me. And that type of stuff applies everywhere, in every industry. The finance is not alone in this.
Yeah, I think what's interesting to me, like, I don't look for degrees if I'm going through resumes, but I look for relevant, skills. Because, again, you get like 10,000 of these that get sent to you.
Sure.
And so it's, let's say that I'm hiring for someone to manage a computer system. I want to see on that resume that they've worked with that computer system in the past. If they haven't, okay, we're moving on. It doesn't matter whether or not you have a degree, it's whether you have the relevant skills. And I think that if more companies look at things that way, I think that that's useful. Now, a college degree for certain things is obviously required, in a lot of cases. Like,
I don't want my surgeon to also be an electrician. I get that. But most jobs aren't that.
I don't know. A surgeon who's also an electrician could open up some very exciting possibilities, Michael.
Yeah, maybe. But you get my point here, is that I would guess that the percentage of jobs that I really need to have that college degree for right out of the gate, it's not the majority of work out there, and oftentimes it gets put on there as a prerequisite for no good reason at all.
If you had a successful career and want to make sure you protect your assets, well, now's the perfect time to create a plan that will allow you to enjoy your retirement years. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to estate and asset protection plan. And in it, you'll get educated on important issues like how to avoid probate, passing your assets along to your family, and potentially eliminating your estate taxes. Don't wait. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been Cushing and Dolan have been helping families like yours for more than 30 years. Let them help you too. Get their new guide called Back to the Basics today by calling 866-848-5699. That's 866-848-5699. Or you can request it online at their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Mike, is there any less inspired name out there than Airbus?
Yeah, I guess it's a little bit silly.
Like,
but I have a little bit of affection for it because, as I've mentioned on the program before, my wife's uncle was a Delta pilot, and he just used to refer to himself as a bus driver because he flew Airbuses, and I thought that was cute.
Yeah, that I guess so, but it's just, Airbus. Right? Like,
it's probably really good.
It's
probably really good wordplay in French, and we just don't get it.
It's not. It's not. But one thing that they are doing right now is making more airplanes than their primary competitor, Boeing, and the reason for that is that they're not held up with all kinds of quality control problems.
The French are cleaning the floor with us right now, people.
Well, it's not just the French. Like, a lot of their factories are in France, but Airbus actually has operations all throughout Europe. It's a huge combination of, a bunch of different companies that used to operate in Europe that basically banded together in order to compete with Boeing and McDonnell Douglas.
Mm-hmm.
But yes, they are absolutely wiping the floor with Boeing. They had 2,094 commercial aircraft orders compared to Boeing with 1,576 last year. Quick break. We're back with Hour 2 in just a bit on the Financial Exchange. Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled 9 Tips to Spring Clean Your Finances. Mike, one of the things people need to look at starting out a year is whether or not they expect a major shift in their income, either higher or lower.
Yeah, I mean, a lot has changed in terms of how we work and just family dynamics over the last few years coming out of the pandemic, and you've seen a lot of people jump back into the labor force that might have gotten out or the opposite of that, and certainly it comes and impacts everything from 401k contributions to how much you're going to be able to save and put out for the next year. And so just understanding where the income side of that budget is going to land for 2024 and doing that evaluation is an important step of the process.
The other piece to pay attention to is the expense side of things, in particular if you have one-time expenses that are going to be coming up, if you need work done on the house, if you've got car expenses or anything else, making sure you plan for that as well.
Well, how are you going to finance it? Do I have an emergency fund? Am I going to borrow money for a home improvement that I'm doing? Maybe I'm already retired and I'm on a fixed monthly budget from Social Security and maybe a pension, and I've got some big expense coming up. You might need to realign your portfolio for that coming expense. And so really just, again, comes mainly down to budgeting here, but thinking about where those income and expense numbers are going to land for the full year.
Our guide is titled 9 Tips to Spring Clean Your Finances, and you can request it 2 different ways. The first is by visiting ArmstrongAdvisory.com. The second is by calling 800-393-4001. That number again is 800-393-4001. Or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the tax relief line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Do you use the expensive blue or yellow pills to charge your sex life? Are you thinking about it? What if we can promise you the same results for less than $3 a pill? If you're paying $20 a pill for the other pills, you're getting taken to the cleaners. Our pills deliver the exact same results for less than $3. You'll save more than $16 a pill for the same results. And right now, radio callers will get 44 blue or yellow pills for $120 with free discreet shipping. You can save more than $700 off pharmacy prices. Charge your sex life now and save a ton of money. Call now and get your 44 pills and save over $700 and qualify for free shipping. Stop overpaying and call right now.
Paid for by Steel Man Pills. 800-475-8547. 800-475-8547. 800-475-8547. That's 800-475-8547.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our DAV medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org. Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org, CancerSupportMass.org.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
A little bit after 11 here as we get ready to wrap up a week on the Financial Exchange, and markets are slightly negative today. The Dow is off 83 points. S&P is down 7, NASDAQ down 57, so anywhere from about 0.1 to 0.3% drops happening on your major U.S. indices. We got the 10-year Treasury up 5.5 basis points to 4.3% currently. That on the back of a hotter-than-anticipated PPI report. So that's 0 for 2 this week when it comes to inflation reports, trying to still show some positive signs of disinflation, both of them coming in hotter than expected. We got oil, West Texas Intermediate, up 14 cents a barrel to 78.17 right now. And nationally, gas prices holding steady today at $3.28 a gallon after a significant rise over the last couple of weeks. A month ago, we were at $3.07, so now up 21 cents a gallon in the last month here, on the back of oil prices going from the 70-71 range into the 75 to 78 range, so kind of makes sense. And then we've got gold today up $5.30 an ounce to $2,020.20. Mike.
Chuck.
Good, just wanted to say hi. So, we've got this piece from Bloomberg that specifically says something that, if I'm being honest, every millennial loves to hear. You can blame boomers for the housing market inventory shortage. And the sound that you just heard was all of our boomer listeners changing the station. Now, I don't agree with this piece. And it's not because I have this, great desire to protect baby boomers from being slandered. I don't. I've been known to occasionally, unfortunately, slander them myself. So it's not there. But I think the slander, it has to be deserved, which means it's not actually slander. And in this case, I'm gonna read here, and I'll tell you why I think that this is hogwash. Nearly 40% of boomers, defined as people born between 1946 and 64, have lived in a home they currently own for at least 20 years, and at least 16% have been in their properties for 10 to 19 years. Previously, older generations would downsize into smaller properties, creating more inventory for first-time buyers and young families. But today, more are choosing to age in place, at least until mortgage costs come down, and that's the driving force behind a lack of available properties that has made it difficult for many potential buyers to crack the market. So, here's what I have to say about this. It's not that they're saying, gee, I love my house so much and I can never leave these memories. It's not that they're saying, gee, mortgage costs are too high and that's why I'm not downsizing. The reason why is because we don't build small houses anymore, and all of the small ones that do exist are already occupied by boomers who have downsized. There are no small properties to downsize into because builders don't build them anymore because they're unprofitable in today's market. So I don't blame the boomers for this because it's not that there's, not enough demand for those properties. There's plenty of it, but talk to any boomer who wants to downsize, and they'll tell you there's nothing out there with, like, 2 bedrooms or 3 bedrooms and, smaller than the 4 I used to live in that's anywhere near affordable. I would be downsizing to that same property at the same price as what I currently own, and I'm not going to do that. So instead they stay because it's not cost effective to do so because there's no inventory at that size.
I wonder if there's anything to say about change in preference, right? Like, I don't think so. But you've owned this single-family home for 20 years, as Bloomberg points out. And the only option to you to downsize today that I hear from a lot of people is I got to share a wall with a bunch of folks. And that's the only way that I can actually save money is if I go into an apartment-style place or a condo, then I'll be able to save money. But I don't want to do that. I want my own just small home with my own small piece of property. I don't think there's anything that I can point to that would say that, oh, yeah, the greatest generation was much more willing to live in a condo than the baby boomers. So I also take out the preference side of it here and say, no, the problem remains that all of the Needham is such a perfect example of this, where we're broadcasting our show from. Every 2,000 square foot home.
No, not 2,000, like 1,200 square foot home.
Heck, even the 2,000s have been knocked down and added to. But every single one of those, regardless of how small the lot was, has been bulldozed and turned into a 3,000 to 5,000 square foot home. 5,000 stretching it. There's not enough room there, but a
3,500 to 4,000.
There's no downsizing ability whatsoever in a town like this.
So I don't blame the baby boomers for not downsizing because I don't think it's their
fault.
fault.
Who can we blame then? Because I want to blame somebody. Like zoning laws?
So we have to blame someone?
Yeah, we got to blame somebody here. Who are we going to blame?
Okay, I'm going to blame permitting costs.
Okay.
I don't know that zoning laws get there because we have previously there's a great chart that I have somewhere that shows the average size of a home being built across like different years. And back in the 1970s, the average home being built was like 1,400 square feet, and by the early 2000s, it was 2,400.
Okay.
So it's not even zoning because you don't zone for a square footage. You zone for single family, multifamily 1 to 3 unit, multifamily 10 to 15, like whatever it is. It's from what I've heard from builders, and I'll believe them on this because builders have no incentive to build other than to make money. Builders say because of all the permitting costs and all this stuff, it's not cost effective for me to build single family homes that are 1,500 square feet. And what you are seeing, the only place that you're starting to see this now, have you noticed what any of the large national builders are doing?
No. Oh, they shrunk a little bit in terms of new build size. I saw that much.
The square footage and the acreage for single family, that's how they're trying to get these properties into the price range that people are demanding them at with higher mortgage rates. And so you are seeing a little bit of return to that because they need to, but it might be that they're cutting the properties from 2,500 square feet to 2,100. And they're cutting the lot size from a third of an acre to a quarter of an acre. It's not necessarily what you would see, historically, but that's where I would probably place
the blame.
The blame is the permitting costs are high, and as a result, it's not cost effective to build small houses on small tracts of land anymore.
I think zoning's still a problem. Maybe it's not maybe in and of itself it wouldn't fix the problem that we're facing right now, but the number of lots that are zoned for single family only when a perfectly reasonable duplex or triplex would go on there, or an ADU that just can't be built in half the country because we don't allow for that sort of thing, is just, maybe it doesn't solve the problem, but it is stupid.
The other thing that's kind of fascinating on this, and maybe someone can fill me in on why more towns aren't really pushing this, but every time that I look at, maybe this is just a Northeast phenomenon, there's a significant lack of over 55 communities in the Northeast. And I don't know why more towns aren't clamoring to build these, because they're generally either, townhouse construction or, small lot, single-family homes.
And they use no town resources.
You don't need to hire more teachers. Running the sewer and stuff like that is easy because it's all close together. It's all new roads, and so you just lay all of the, stuff underground, all of the telephone wires and stuff and the cable and all that and the electricity underground while you're doing the roads, and so you don't have to worry about maintenance on that stuff the same way you used to. And I'm trying to figure out why this is not being built more, because I talk to so many people in that, age 60 to 80 range, and they say, I'm looking for, something in an over 55 community, but, there's nothing up here. And I'm trying to figure it out, why more towns that are, trying to, solve the property tax problem of how do we broaden the tax base without, angering residents, and, combined with, hey, if you want to make the local housing market more dynamic, giving boomers, more options to move to is a huge thing. It would seem to be a slam dunk, but you just don't see enough construction in that space. I don't know what to make of it. But let's take a quick break here. When we come back, we're going to be joined by Brad Hartz from Compass Real Estate right after this, coming up.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
There's no bad time to review your financial planning strategy, but with spring coming soon, the perfect time is right now. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Our new guide is called 9 Tips to Spring Clean Your Finances, and it's packed with information about planning for a one-time expense this year, like a new car or family vacation, and how that purchase might affect your finances. We also look at how to plan for major future expenses, like a new home or a child's college education. Take the time now to address any issues that may affect your financial strategy and spring clean your finances. The guide is free, and it's yours today by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands and enjoy your next incredible vacation. Explore St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Brad Hartz is the Metro West Real Estate Sales Advisor for Compass Real Estate, and he joins us on the program in studio today to talk about the spring housing market and where we might be going from here. Brad, thanks for joining us. Appreciate it.
Thanks for having me.
So I know nationally we kind of think of, or I've heard realtors speak about, Super Bowl Sunday passing and then the real estate market starting to heat up. Does that apply to here in the Northeast and New England? I know, I got a little bit of snow last night, so that's not exactly great for an open house. But when do we typically start to see things heat up for the spring?
Sure. So that's a great question and the question. So I can speak to what we've seen traditionally, and that is a spike in January, which is what we saw this year. Okay. So we see inventory perk up a little bit in January. Actually, it naturally goes up after the holidays. So a little bit of more actives, pendings, and solds closing in January, and then it softens a little bit in February for the school break, which is what's coming up, actually kicks in, right? So I would say 2 weekends from this weekend, it's going to be a spring market here in Massachusetts. Absolutely, yeah. So
today I see almost no inventory. I was reading an article about best school districts in this area, and Hopkinton, Massachusetts, firmly in Metro West was one of them that came up. I see a total of 5 properties for sale in Hopkinton, Massachusetts. One of them is 2 parts of a condo. So not a lot of inventory out there, and this is a national story. We have inventories, I don't even, maybe where they are nationally in terms of pre-COVID levels, but is there anything that would indicate to you that we're going to see significant upticks in inventory this year outside of a recession, or is it more of the same coming for 2024?
I can't speak completely with regard to the national market,
sure,
but we are seeing some softening in some areas that during the pandemic saw some significant spikes in activity from the West into Phoenix, parts of Texas, and Florida. So there's a little bit more softening happening in some of those areas, and sometimes, people do say what starts west comes east. So there could be some softening or some, especially in the high end. The ultra high end here in this area, a little bit of softening, but there isn't anything that points to any kind of a spike in inventory right now.
Where are we in terms of listings, just month over month, year over year? Do you have some data that you can share in terms of just what does inventory look like right now?
Sure, yeah. So what I like to do is I like to look at month to month and then year over year, just as you asked. So, really month over month, we're just 5% down, so that small dip. In total, single-family actives in Massachusetts. So just down 5% slightly for the selection of single families. Now, this is for the entire state. There are a number of towns that are down 80 to 90% from where they were pre-pandemic. Okay, so year over year, we're actually flat. We're looking at a very similar year to what we had last year at this time as far as what's coming for the year, which was, as we know, nationally, and also in Massachusetts, a drop in the total number of sales, especially from where we were in the peak of 21. So last year at this very time for single families, we're actually down only 0.02%. So just 6 total listings short of the active inventory right now, year to this date last year.
Got it.
Yeah.
I don't pretend to have any sort of expertise in terms of when rates come down or go up further. Quite frankly, even in the real estate sector, I don't think anybody has a great sense of, are they going to come down by this date? if they do, which has been the narrative that's played through the markets through the end of last year, through January here, that, hey, rates are going to come down in 2024 because the Fed's shrinking them. My personal feeling is that there is a lot of pent-up demand for mortgages that would occur if that actually happens. What do you see? You talk to people on the ground. You talk to realtors. You talk to potential buyers. Am I right about that? Is there just a ton of pent-up demand that's waiting for lower rates, which would negate the idea of the real advantage received by those lower rates?
There are a lot of people on the bench waiting with the idea that rates may come down and that may be of an advantage to them. But there are also a lot of people actively looking right now. I mean, we see it every day. I saw it just last weekend at open house with, literally 44 people coming through to an open house. So the demand is there, and it just so happens that there are people that are not impacted by the rates. And honestly, year over year, for the properties that are active right now, we are up as far as the median asking price by 12% over last year. Okay, and for solds year to date, just looking at the solds from January 1st to February 16th, where we are now, for that time period last year and this year, the median sales price is up from $549 to $590. That's for the solds during this time period. So prices are going up. The interest rates are not impacting it in and around the Boston area, but in some areas, certainly it is.
Brett, last year there was I know there's the big ruling in, was it Missouri, about real estate commissions, and quite frankly, we talked about it a lot at the time. I think there's plenty of people that have probably heard of it and have no idea what it means practically. Are there practical implications for buyers or sellers that they need to be aware of and think about, given that ruling in a completely other state that may not even apply to here in Massachusetts?
Sure. So it's been in a number of states at this point.
Okay.
And basically what the plaintiffs have sued and won for or settled for was basically their feeling that they were forced or coerced or not offered a chance to change what they offered the buyer agents in their listing agreements.
Yep.
So when a seller signs a listing agreement, there's a portion that goes to the person that lists the home and represents the seller exclusively, and then there's somebody for the buyer side. And basically what they said was, we didn't have a chance. We were just told what we had to offer the buyer side. And so at this point, nothing has changed from a true official standpoint. There are places around the country where there are no buyer broker commissions being offered out in the MLS listings, which means that the buyer agents therefore have to negotiate with their clients while they are writing offers for properties to get paid, basically. That's sort of where it's going. But nothing has changed as of yet.
Brad, I've only got about 30 seconds here, but tips if you are a buyer going out there this spring looking for properties. I won't get to the sellers because there's too few of them that are listening right now, but a lot of people that are interested in a property.
Sure. If you're a buyer and you're willing to do any work on a property, you're at a big advantage. There might be a bigger selection for you, and also there's going to be less competition. So if you're willing to do work, you're at an advantage if you're not looking for something that's completely done. Another thing that they should absolutely make sure to do is to get a loan commitment subject to finding a property. So that basically means they've gone through the whole pre-approval process, and all they need to do is find a home, and then they'll have the loan. And that makes
them taken seriously.
It makes them a much stronger buyer. And the final thing would be raising the aggregate. When you're writing an offer, the offer, if it's subject to an inspection, there's something called the aggregate amount that you're willing to accept for what might be wrong or need repairs of the property. And so traditionally it's been zero. If you write in a zero amount as the aggregate, then if anything is wrong with the property, then you can get out of the deal.
Yeah.
But if you raise that aggregate, that amount, it means that you're willing to accept the property with a little bit of work that needs to be done.
Brad Hartz is the Metro West Real Estate Sales Advisor for Compass Real Estate. Joins us today to talk about the coming spring housing market here and nationwide. Brad, thanks so much for joining us. Appreciate it.
Thanks for having me. Appreciate it.
Quick break. We'll be right back.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our DAV medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org. Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Trivia brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now that's eating good in the neighborhood, void where prohibited. Dine in only. Well, today is tennis legend John McEnroe's 65th birthday. McEnroe won 7 Grand Slam single titles and 10 doubles Grand Slam titles. McEnroe had his most famous outburst during his first round matchup at Wimbledon back in 1981. Trivia question today: what now iconic phrase did McEnroe shout at the ref? Once again, what now iconic phrase did John McEnroe shout at the ref? Be the fourth person today to text us at 617-362-1385 with the correct answer. You can win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card in the next segment. 617-362-1385, and the fourth correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Piece of the New York Times, Mike, talking about how home insurance premiums continue to rise, in particular in areas that are being hit by larger and more expensive natural disasters, most namely Florida and California, which otherwise don't really have a whole lot to do with each other when you're talking about, you know, A, the types of disasters, B, the types of governance, C, the overall cost of the area. But just as an example, they outline someone who lives about 20 miles east of Tampa, Florida, who in 2022 saw their home insurance bill jump from $3,800 to $8,000.
Yeah, I was speaking with a homeowner in the Tampa area yesterday, actually, who she lives in a condo, but the condo fees went up by 40% because of insurance.
And so what they did, they said, look, I can't do that. Let me figure this out. And so he worked with his insurance agent to pretty much, it looked like the amount of coverage that he has dropped from about $710,000 down to $560,000. So that took his bill from almost $8,000 down to under $5,000.
Hope you're ready for a much smaller home if that thing burns to the ground.
Well, and this is the thing, is if you happen to get hit by any kind of disaster, anything that happens just to your house in particular, you no longer have the money to rebuild it the way that it previously was.
Yeah, I remember this came up when I was purchasing my home because my policy, had a limit on there that the mortgage company looked at. I was like, I don't think so. But then I did have a caveat in there that, this is the amount that they estimate, but they will reimburse for full reconstruction costs regardless of the price. And so that is not very common, apparently. In fact, in Colorado, the insurance commissioner was taking a look at homeowners' insurance policies because there was a fire in the Boulder area that took out a number of properties. And what they found was that only 8% of policies in the affected area by the fire pledged to cover rebuilding costs no matter how high they got. And you can think about this for a minute, right? Like, let's say your area is ravaged by fires. Not only, are you going to want to perhaps rebuild that home, but so are all of your neighbors, meaning the costs to construct are going to naturally go up. There's going to be delays. There's going to be all sorts of problems. And I don't know. I think where I'm getting to is that there's probably a vast amount of underinsurance compared to the risks that are out there right now, and the insurance companies, kind of rightly so, are jacking up premiums very rapidly. This problem, by the way, I see it repeated in other areas of insurance, too. Like, property and casualty is one thing that I am immensely concerned about, but you talk to folks all the time where, I had life insurance coverage through work, but I'm not working there anymore, and turns out I can't take that with me, or if I choose to, it's going to be really expensive. And insurance is never a fun thing to talk about because you're talking about insuring against what might be the worst day of your life or worst day of your family's life, like your home burning down or a hurricane hitting your area or losing a loved one. It's much easier to just put your head in the sand and ignore the problem. But insurance is usually a critical component to any financial plan. And at the very basic level, it starts with just understanding what you have. Now, many places across the country are becoming more and more unaffordable to insure because of these, recurring natural disasters, or in the case of Florida, other factors too, such as fraud. But if you're not evaluating this stuff on a regular basis, clearly, as this article points out, you can leave yourself far more exposed than you previously thought. If you have questions about how insurance might fit into your overall plan and how to assess that, give the folks at Armstrong Advisory Group a call. You can talk to a human being by calling 800-393-4001. Again, that's the Armstrong Advisory Group at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, were you a fan of the band The Light Funky Ones back in the late 90s?
I have no idea who that is. Do they have any hits?
More commonly known as LFO.
I think I remember that. Yeah.
They were the one-hit wonder who did Summer Girls. Which
Oh, yeah.
We all remember.
Yes.
I Like Girls Who Wear Abercrombie and Fitch.
Yes. Got it.
The reason that I bring this up is that since October 27th, Abercrombie & Fitch stock is up 101.5%, outperforming even NVIDIA. Now, granted, their market cap is significantly lower than NVIDIA's, so they're not really starting from the same place. NVIDIA right now is valued at $1.82 trillion, whereas Abercrombie & Fitch is valued at about $6 billion. So there's a difference.
But according to Bloomberg, not alone here. Wingstop, Dave & Buster's, Dick's Sporting Goods, there is a discretionary sector of the stock market that is on a tear right now and kind of hasn't been talked about. Not by me, anyway.
No, and so the question is, hey, how much farther can this go, or are you going to end up with some of these companies kind of coming back to earth? And I think when we look at it, and again, I'm just going to look at Abercrombie just as an example here, still do $4 billion a year in revenue, which is more than I thought. Did you think people were buying $4,000 of Abercrombie stuff last year?
No, I hated that store. The music was blaring, and there was always some, creepy dude standing out front of it trying to get you to... Yeah, I did not think that was the case. I haven't been to a shopping mall in months.
Now, Abercrombie's revenue is pretty much at the same place it was at in July of 2008, just before the financial crisis. So it's not like this is some company that's been, surging and growing a ton. But hey, $4 billion in revenue is $4 billion in revenue. They're actually profitable. $208 million in profit in again, tough space. Mall-based retailer, not great. They're free cash flow positive. $476 million in free cash flow. That is, an improvement from the $309 million in free cash flow they lost as of October of 22. But they're actually a retailer that, aside from a couple, points in time in the last 20 years, has generally been free cash flow positive.
I have to say I'm fairly impressed that a company that was this popular when, millennials were 14 and 15 is still relevant today. That's surprising to me.
In the fashion space.
Yes.
The company is trading at 18 times forward earnings. It's trading 1.5 times forward sales. And look, I don't know what's fair or not. Again, fashion and fashion retailers and mall-based retailers, it's a tough business. But you look at this, and nothing that I see here makes me go, oh, gee, it's all going to implode.
Other than the fact that it went up by 108% in however many months. But
yes,
that in and of itself doesn't tell you anything.
No, even that, you say, okay, is there some kind of pullback coming? Maybe, maybe not. I'm not an expert at Abercrombie forecasting. It's honestly, this is a name that I don't think I've even thought of in the last 25 years. But I look at this and I'm just not sure. This piece makes the case that, hey, retail sales are, going to be in trouble and blah, blah, blah. And maybe they are, maybe they aren't. But I would make a case that there is far more to be concerned about in other parts of the market than what's happening with Abercrombie and Wingstop right now. It doesn't mean that these are going to continue going up because, as you noted, hey, when you double in 3 months, that's not really the sign of a healthy market either. But the valuations are not nearly as nutty as places that you're seeing elsewhere in the market.
Mm-hmm.
That's kind of the point I would make, I guess. Let's take a quick break, and when we come back, we're going to be joined by Paul LaMonica, who's talking about one of those exact places right after this.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street right here on the Financial Exchange Radio Network.
Thanks to dedicated members across the nation, the DAV programs are far-reaching and the personal rewards fulfilling. Our members are diverse in their interest, which is what has made the DAV so successful. Foremost in our hearts is the goal of assuring benefit entitlement and compassion for our disabled veterans. For more information, visit davma.org. That's davma.org.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled 9 Tips to Spring Clean Your Finances. Mike, one of the things people need to look at starting out a year is whether or not they expect a major shift in their income, either higher or lower.
Yeah, I mean, a lot has changed in terms of how we work and just family dynamics over the last few years coming out of the pandemic, and you've seen a lot of people jump back into the labor force that might have gotten out, or the opposite of that. And certainly it comes and impacts everything from 401k contributions to how much you're going to be able to save and put out for the next year. And so just understanding where the income side of that budget is going to land for 2024 and doing that evaluation is an important step of the process.
The other piece to pay attention to is the expense side of things, in particular if you have one-time expenses that are going to be coming up, if you need work done on the house, if you've got car expenses or anything else, making sure you plan for that as well.
Well, how are you going to finance it? Do I have an emergency fund? Am I going to borrow money for a home improvement that I'm doing? Maybe I'm already retired and I'm on a fixed monthly budget from Social Security and maybe a pension, and I've got some big expense coming up. You might need to realign your portfolio for that coming expense. And so really just, again, comes mainly down to budgeting here, but thinking about where those income and expense numbers are going to land for the full year.
Our guide is titled 9 Tips to Spring Clean Your Finances, and you can request it 2 different ways. The first is by visiting ArmstrongAdvisory.com. The second is by calling 800-393-4001. That number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
Well, in honor of tennis legends John McEnroe's 65th birthday, we asked the trivia question today. What now iconic phrase did John McEnroe shout at the ref during the 1981 Wimbledon match? Well, that would, of course, be...
You can't be be serious, man. You cannot be serious!
That would be You Cannot Be Serious. We have two winners to announce today. Jim from East Falmouth taking home a Financial Exchange Show t-shirt, and the weekly winner of the $100 Applebee's gift card would be Todd from Smithfield, Rhode Island. So congrats to both winners there. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now, that's eating good in the neighborhood, void where prohibited, dine in only.
And in fact, he was serious. So there's that. Let's go now to Paul LaMonica, who is now with Barron's. Paul, first, congratulations on the new job. We're excited for you.
Thank you very much. Yeah, I'll be starting in a few weeks.
Fantastic. Let's talk a little bit about a company whose name sounds like it's out of Zoolander, but in fact is a real company, and that is none other than Supermicro Computer Incorporated. Why is Supermicro Computer Incorporated up 253% on the year through yesterday?
Yeah, it's crazy. I hope you don't expect me to do my blue steel face to describe Supermicro Computer stock, but SMCI has just been on a tear because it has really hitched its wagon to the AI revolution. And when you think of just about every tech stock that has surged in the past 12 months, there's probably an AI component. And with Supermicro Computer, this is a company that has explosive revenue and earnings growth, earnings expected to nearly double this year, and they sell servers and other hardware that are used by companies that are developing AI solutions, particularly in the chip space. So, they work very closely with NVIDIA and AMD and Intel, and obviously those companies, NVIDIA in particular, have surged because of all the hope and hype about AI.
Paul, I was looking back just at some stuff from the original tech bubble back in, kind of 98 through 02. And in looking just at comparing NVIDIA and Intel and how, the Intel run-up in 98, 99 looks an awful lot like NVIDIA today, is there any sense that either of these companies, Supermicro Computer or NVIDIA, actually have anything that's going to allow them to continue this type of growth? Or do they just probably end up looking like Intel after the tech bubble where, hey, they're still really profitable, they still might have really good businesses, but the stocks just have to come back to normal because they can't do this forever?
You're right that they can't do this forever. What's interesting about what's happening now versus the late 90s and early 2000s, obviously a lot of companies that are no longer with us because they were never profitable went by the wayside, and that's not the case with NVIDIA and Supermicro Computer. Both of those companies, let's take a look at Supermicro Computer, for example. I mean, the earnings, I believe, are expected to go up about 80 to 90% this year. If they hit those targets, last check, even with the gigantic, probably unsustainable run-up, and SMCI is pulling back today, down about 10% at last check, the stock was only trading at around 40-ish times forward earnings, which is certainly expensive, but it's not nosebleed triple-digit valuations that we saw in the late 90s, early 2000s. And I think you can say the same thing about NVIDIA. So I agree. What worries me is that this market that we are living in right now, where retail investors, the Robinhood crowd, the meme stocks, the Reddit crowd, they have latched on to AI as their new kind of play toy, that their new chew toy that they're kicking around. There's a huge difference, I think, between Supermicro Computer and NVIDIA and what happened in the past couple of years with, let's be honest, crappy stocks like GameStop and AMC that never had the fundamentals to justify the valuations. But there is an element of froth here. And these are also stocks. Supermicro Computer at last check, I think, had a short interest of about 10%. Not exorbitant, but there's enough short interest there that there's clearly a squeeze going on pushing this stock higher, and that's unsustainable as well.
When we look at this, one of my colleagues, Mark Fandetti, was talking about this the other day where, in the tech bubble, the average person could see what was going to change as a result of personal computers. You got one, and immediately you had access to the internet and all these things that you could do previously. with AI, it doesn't seem like it's as accessible to the individual, but more, hey, here's what companies could do with it. Is that a fair assessment at this point?
I think it's somewhat fair, but I believe we're going to get there at some point, that there will be more consumer-oriented AI features that make sense. You look at with OpenAI, what they just did with the new video prompt that I think has created a huge wave on X and other social media platforms, where people are typing in these prompts for these elaborate scenarios, and OpenAI is able to churn out a video that encapsulates exactly what someone had written in the prompt. Whether or not that's something that will have consumer applications, I think still remains to be seen. But remember, in the late 90s, there was also the big craze of B2B commerce before B2C really took hold as well. So I'm not sure that AI is something that is destined to be overhyped, that won't have applications for the consumer. It's more just that these companies have run up too far, too fast. And you're right. I think they do have to come back to earth and settle down.
Very good. Paul, we appreciate you joining us today. Thanks so much for the time, and have a great weekend.
Thanks a lot, guys.
That is Paul LaMonica from Barron's talking about Super Microcomputer Incorporated. What a great name for a company, Mike,
right?
Isn't it?
It's not just microcomputer. It's super micro. It's pretty good. Pretty good.
Super duper microcomputer incorporated. That's what my
Just
competitor
gonna
would be
keep
called.
One-upping each other. Yeah.
I've often thought about this, where we talk about the Super Bowl a lot, and isn't that just kind of a silly name for the biggest football game on earth?
Yeah, I guess. It doesn't really have the same meaning anymore because it's so ingrained in everyone's.
Imagine if the Stanley Cup was called the Amazing Cup.
Yeah, fair. The Super Bowl.
The Super Bowl. The Dow Jones is up 2 points, Yahoo, and the S&P's up 2 points as well, double Yahoo. The Nasdaq still in red, down 23 points, but holding up well, all things considered, when it comes to the inflation data we've gotten this week. Hope everyone has a great weekend. We will see you next week on the Financial Exchange.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department